So hi there, I'm Trisha, and in this video, me and my groupmates will be tackling about the difference between full PFRS and the PFRS for SMEs and small entity. But first, let me discuss to you what is PFRS. So PFRS, or the Philippine Financial Reporting Standards, or the Philippine Accounting Standards, or the PAS, are the new set of generally accepted accounting principles, or the GAAP, issued by the Accounting Standards Council, the ASC, to govern the preparation of financial statements. So you might also ask what accounting standards are used in the Philippines. So our country, the Philippines, has adopted IFRS standards as Philippine Financial Reporting Standards, except on the aspect of revenue recognition under IFRS 15 for real estate companies that avail of the relief granted by the Securities and Exchange Commission, or the SEC. Next, what is the PFRS for SMEs and small entities? So, PFRS for small entities is a third financial reporting standard proposed by Association of Certified Public Accountants in Public Practice to cater the needs of small entities. So, PFRS for small entities is available for companies with total assets or total liabilities of over 3 million but not more than 100 million. So PFRS for small entities provides simplified accounting, disclosures, and accounting treatment options, and lessens the need to account for estimations and judgments. This simplified accounting framework was locally developed to encourage startup companies and small businesses to comply with the regulator's reportorial requirements. Then the PFRS for SMEs. So the Securities and Exchange Commission, or the SEC, has adopted a specific set of financial reporting rules for small to medium entities or firms with assets of between 3 million and 350 million. So many of the principles in the full PFRS for recognizing assets, liabilities, incomes, and expenses have been simplified for SMEs. So the complete set of financial statements required of an SME reporting under the PFRS is similar to that provided for the full PFRS and includes first a statement of financial position, or the balance sheet. Next, either a single statement of comprehensive income or separate income statements and a separate statement of comprehensive income. Next, a statement of changes in equity, a statement of cash flows. Next, a notes including a summary of significant accounting policies, and lastly, a comparative information relative to the previous comparable period. Then for the Securities and Exchange Commission Memo Circular 5, in full PFRS, total assets is more than 350 million, then the total liabilities of more than 250 million. For PFRS for SMEs, total assets of more than 100 million to 350 million, and the total liabilities of more than 100 million to 250 million. Then the PFRS for small entities, we have a total assets of between 3 million to 100 million, and a total liabilities of between 3 million to 100 million as well. For the income tax basis, or PFRS for small entities, we have a total assets of below 3 million and a total liabilities of below 3 million as well. So,
So next is the definition of investment in associate of PFRS for SMS, in which an associate is an entity over which the investor has significant influence, but that is neither a subsidiary nor a joint venture of investors. While the full PFRS has the same as IFRS for SMS, in which requires power to participate in financial and operating policy decision of an investee, but not joint control or of those policies. The next one is a significant influence, in which the PFRS for SMS has a power to participate in financial operating policies decision of the associate, but is no control or joint control over those policies, in which it holds at least 20% of the investee voting power. And if there's a presumption may be rebut if there are clear evidence to the contrary. And while the full PFRS has a similar to FIRS for SMS in addition, it gives the following, which is required the investor holds less than 20% of the voting power and investee. Its representation on the board of directors are equivalent to body. Next is the participation in the policy making process. So the next one is measurement after initial recognition. In PFRS for SMS, an investor may account for its investment using one of the following: the cost model, or cost less any accumulated impairment losses. And the second is the equity method. Third is the fair value through profit for losses. While the full PFRS investment in associates are accounted for using the equity method, some exceptions are in place. For example, when the investment is classified as held for sale. Next is the cost model and PFRS for SMS. An investor measures in associate at cost less any accumulated impairment losses. All the dividends are recognized in income statement, while the full PFRS are not permitted except if in separate of financial statement. In fair value PFRS for SMEs, an associate is initially recognized at the transaction price, which including the transaction cost, and every transaction that has a cost, which is changes in fair value, are recognized in profit or loss. While the full PFRS, it also has not permitted except in separate financial statement. In separate financial statements, PFRS for SMS, where separate financial statement of appearance are prepared. This is not it's not that required. Will management adopt a policy of accounting for in associate either at cost less impairment or at fair value through profit or losses. While the full PFRS is also similar to IFRS for SMS, which has an additional investment are accounted for in accordance of S5 with they classified held for sale. And for classification and presentation, the PFRS for SMS, an investor classifies investment in associates as non-current assets. And also, associates are presented as a line item on the balance sheet. And while the full PFRS has also similar for SMS, however, only those associates accounted for using equity with the method are presented as it lines.
So now we have disclosure to notes to financial statement. So compliance with the PSRF for SME, an entity whose financial statement comply with the PFRS for SME shall make an explicit and unreserved statement of such compliance in the note. So disclosure to notes to financial statement under PFRS for SME, accounting policy, carrying amount, fair value investment, and dividend income. So disclosure to notes to financial statement under full PFRS, reason why associate is not accounted for using the equity method. Summarize financial information of associate not accounted for using the equity method. Share of any discounted operation of associate separately presented. Share of changes directly recognized in associate equity. Share of contingent liabilities incurred jointly with under investor. Any contingent liabilities that may arise because an investor is severally liable for all the parts of the liabilities of associate. Next is the definition of investment property. Under PSRS for SME, investment property is a property, land or building or part of a building or both, held by the owner or by lessee under the finance lease to earn rental or for capital appreciation or both. A property interest held for use in the production or supply of goods or services or for administrative purposes is not investment property. Definition of investment property under full PFRS, same as IFRS for SME, accounting result likely to be the same. An investment property must measure initially at its cost. Transaction costs are included in the initial measurement. So next, initial measurement under PFRS for SME. The cost of purchase investment property is its purchase price plus any directly attributable costs such as professional fees or legal services, property transfer taxes, and other transaction costs. Borrowing costs are recognized as expenses. So, initial measurement under full PFRS, similar to IFRS or SME except for borrowing costs that are directly attributable to the acquisition, construction, or production of the qualifying asset are required to be capitalized as part of the cost of that asset. So next, we have subsequent measurement. Under PSRS for SME, investment property is carried at fair value if its fair value can be measured, reliable without undue cost or effort. Otherwise, the cost model is used. So, subsequent measurement under full PFRS, management may choose as its accounting policy to carry all its investment properties at fair value or at cost. However, when an investment property is held by lessee under operating lease, the entity follow the fair value model for all investment property. So next we have fair value. Under PFRS for SME, gain and losses arising from changes in the fair value of investment property are recognized in profit or loss. Fair value under full PFRS, same as IFRS for SME.
Now we have here the cost model. So the cost model under PFRS for SME is the cost model is consistent with the treatment of property, plant, and equipment. So the PFRS for SME defines property, plant, and equipment and tangible assets that A are held for use in the production or supply of goods or services, for rental to others or for administrative purposes, and B are expected to be used during more than one period. So the initial measurement of an item of PPE shall be initially measured at cost. So the cost of an item of PPE comprises the following: A. Purchase price, including legal and brokerage fees, import duties, and non-refundable purchase tax. B. Um, any direct attributable cost to bringing the asset to the location and condition necessary for it to be capable of operating in a manner intended by management. And C. Initial estimate of dismantling cost and restoration cost for which the entity has a present obligation. So the PFRS for SME is now amended to allow the revaluation of PPE. In the paragraph 17.5 provides that an entity shall choose either the cost model or revaluation model as an accounting policy and shall apply that policy to an entire class of PPE. So the comparison of PFRS for SME are now the same with respect to matters related to PPE such as measurement, depreciation of significant components, revaluation, impairment, and recognition.